Now, with all of the Trump indictment stuff blowing through the headlines yesterday, you missed developments, of course, in the ongoing case against Joe Biden and how he's leading toward impeachment. You also missed one other thing, a banner day yesterday in Bidenomics. The U.S. credit rating was reduced from AAA to AA+. And you know what that means. Neither do I. But E.J. Antoni does. He's a research fellow for the Center for Federal Budget over at Heritage Foundation. Why should I care about this, E.J.? It sounds bad.
Certainly. Well, as Kamala Harris put it, AAA rating is 3 letters and a AA rating is only 2 letters, and that's all you really need to know. So, but what makes that funny though is that's actually a believable explanation coming from the vice president. Unfortunately, though, this really is nothing to laugh about. This signifies that the United States is clearly not as good of a bet as people once believed it was. It used to be that government debt from the United States was considered the gold standard, and that's just not the case anymore. And people miss the fact that just because the United States is not going to explicitly default on its debt, meaning fail to actually give you dollars when they say they will, people have missed the fact that the dollars they give you can be worth much, much less than the dollars you originally lent them. And under Joe Biden, we have seen the United States dollar lose 16% of its value in a very short period of time. And so if you're an investor and you're going to be repaid with dollars that are worth 16% less, you are going to wonder, is the United States really a good bet anymore?
So here's why I'm sorry, EJ, I hate to do this to you and push back, but I've seen Joe Biden time and time again tell me that he has reduced the federal deficit. I would think that that would then have some positive impact on our debt. They should be giving us quadruple A ratings at this point.
Well, Larry, imagine for a moment, not that you need to, but imagine for a moment you're trying to lose weight and you say, well, I forewent dessert tonight. And so tomorrow morning at breakfast, instead of having something like just a couple of eggs and a slice or two of bacon, I'm going to load up on pancakes and waffles and danishes. That's essentially what Joe Biden has done with the budget and with the deficit. He allowed some COVID spending to expire, which did reduce the deficit. The problem is he simply replaced it with new spending. And in fact, government spending is at an all-time high today, not just in nominal terms, but in real terms too. In other words, even after you reduce the level of government spending to account for inflation today, it is still at a record high.
So when Fitch reduces our credit rating from AAA to AA+, by the way, AA+, not awful, it's just not as good as AAA. Are they doing that mostly just because of the debt issue and the fact, as you just put it, our currency is not worth what it was when you first acquired it? Or is there also a statement here that they have lost confidence in the leadership of our government to actually fix the problem?
It's both. And, it's actually not even simply a conservative or liberal talking point issue here, because it's not simply the fact that they are saying the government is spending too much money and is going to be incapable of paying it back in the future, which conservatives obviously agree with. But they're throwing a bone, I guess you could say, to the liberals as well by saying that the failure to raise the debt ceiling in a timely manner also factored into Fitch's decision here. Okay. And obviously the liberals are very happy about that because they wanted the debt ceiling raised immediately with no questions asked and no spending cuts.
Didn't Standard & Poor reduce our credit rating about, like 10 years ago?
Yeah, in 2011, actually. And shortly thereafter, they were investigated by the federal government. So we'll see if the same thing plays out here with Fitch. I mean, it is very, very clear that the SEC is full of bad actors. And I would not be surprised if the same thing happens again.
So how does this affect everyday consumers? Does this have an effect on interest rates? Not that there's anything great about interest rates right now anyway. Does it affect the power of the dollar? What will regular Americans feel this?
Well, when it comes to sovereign debt, it tends to be the case that investors move before the credit ratings agencies. And the reason for that is because we're dealing with data that's already publicly available. In other words, investors tend to start selling off these sovereign bonds, these government bonds, or they start demanding higher yields before the credit rating agencies actually make their decision to downgrade the debt. And that's exactly what we've seen thus far this year, with the yields on many U.S. treasuries going higher and higher. year, and that predated the decision just yesterday by Fitch.
Now, I'm sure you've seen President Biden's campaign statements and his rallies around Bidenomics, how everything's great, and the talking point is Bidenomics is fixing things, Bidenomics is great. So clearly he's not going to do anything to change the direction we're going. Of the Republican candidates right now, is anyone standing out to you, or multiple candidates standing out to you, that actually has a clear message about how to fix things should they win the presidency?
There's a few that do stand out. Vivek Ramaswamy is one of them. He has come out with a very clear plan with actual numbers attached to it, surprisingly, that detail how we need to cut back all kinds of spending, whether it's defense or entitlements, you name it, and how we need to essentially move the Federal Reserve away from being what is essentially a political arm of the executive branch into being an independent organization that actually keeps our currency stable. Donald Trump also has put out a what I think is a fairly clear plan, again, with some numbers attached to it, which is very, very important because so many other candidates, Mike Pence comes to mind, Ron DeSantis as well, have come out with a lot of statements that sound good, but there aren't hard numbers and figures attached to them. So they may have the best of intentions and they may actually have very good plans. They just haven't made them public yet.
Do you expect any move from the Fed? Again, I mean, last time they got together, they raised rates again. Is this the kind of thing, this credit rating issue, something that the Fed would react to?
No, I don't think so. Unfortunately, as much as the Fed says they are data dependent, the record says exactly the opposite. We have inflation, for example, that is still not at the target rate of 2%, and yet the last 2 months, the Federal Reserve allowed the money supply to grow, not shrink. They have paused twice now, and so what I think they're going to do effectively is continue this pattern of pausing and raising by 0.25%, and that's their way to effectively have 1/8 percentage point raises.
By the way, in reading about this, and I've learned quite a bit in our conversation just over the last 10 minutes, I found out China has a A+ rating, which is several notches below where the U.S. is. So, and of course, their economy continues to, well, I understand the central government is propping up their economy by manipulating their currency, and they have slave wages, but still, they seem to be doing okay economically. So it doesn't have that big of an impact in the long run. It's just sort of new for us, right?
Sure, absolutely. And the United States having this AAA rating, frankly, I don't think it's as valuable as many people believe it is. Again, because investors oftentimes are smarter than the ratings agencies when it comes to sovereign debt, and investors tend to move before the rating agencies do as well.
Yeah.
It is very well understood that you can't trust the economic numbers coming out of China, just as it was equally understood that you couldn't trust the economic numbers coming out of the Soviet Union.
Right. Although the way they keep readjusting our economic numbers 3 quarters later, it sort of makes our projections a little dubious too.
It makes you wonder, Larry.
Yes. Not that we're China or the Soviet Union or anything, but I'll leave it there. E.J. Antoni.
Not yet.
Not yet. Research fellow, Center for Federal Budget at Heritage Foundation. Anyone ever tell you look like Vince Colonnese, that radio guy in Washington? Weird.
Once or twice. I'm not sure why, but once or twice.
Yeah, you might want to look into that. Wouldn't wish that on anyone. There's more to come on O'Connor tonight. Keep it here. It's Salem News Channel.